All right, traders, I ended up finishing the week very, very strong. The portfolio was up 9.74% on the day, over 20% this week. With that being said, if you watched my previous video, the theory was SPY was going to close strong. It was going to start to fill the gap within the next 2 days from Friday till Monday if it just stays green. As long as the SPY does not go red, it's going to be bullish, and it would be best to stay away from puts. And that theory worked out 100% correct. Within this video, I'm going to be recapping the trades that I ended up making today. We're going to be doing a new in-depth price action analysis on the SPY along with the stocks I went over yesterday. So make sure you stay to the end if you are serious about learning how these unique price action gap trading strategies work. And if you want to continue to be prepared to trade the best setups at the best prices, make sure you are subscribed to the channel and smash that like button. Let's get straight into it. So as you can see, the portfolio is up 9.74% on the day. I had 2 scalps on SPY. I did actually do puts, which I did not mention in my video. In terms of my video yesterday, I said play puts if it goes red. It never went red, and I decided to play puts. I'm going to explain to you why that is. But the portfolio started off up 7% on the day, first 13 minutes in the market open. Then I took another quick scalp on a SPY put, and then that boosted my portfolio to 9.74%. Then I called it from there. I'm going to be explaining all this. Big shout out to Johnny, up 15%, consistency, absolutely killing it. Big shout out to Vincent, 2% return on the portfolio. Very nicely done, guys. So with that being said, let's get right into it. So in terms of the SPY, the theory was if we do not go red on the day, then it would be best to stay away from puts because, like I said, within the next 2 days from Friday to Monday, if this doesn't go red today like it never did, we're going to be on track to see a reversal where if this 381 level, this 380.50, this 379.50 to 380.50 level turns into a support level and SPY does not go red because it closed at, 370 at 377.91 yesterday. And if it does not go red, that means that it's going to start to turn this key red line, this make it or break it level, this 379.50 level into support. And if the SPY does turn that into support, within the next 2 days, it'll be on track to shoot up to about $388. How do I know this? Because look at how it reacted right here. You had a strong green day right here. You had a strong green day right here. Next day, if it stays green and turns this red line, this 379.50 make it or break it level into a support level, it's going to be on track to break out. And on this day, it got to a high of 385.87. That is why I had mentioned when I was done trading for the day, I mentioned to members, if you do want to play puts on SPY today, you're going to be betting against the overall trend. But if you want to do a quick scalp, the best level is going to be 385.70. That's going to be the best level to scalp puts on SPY would be 385.70. And then heading into next week, we're going to take 388.67 into consideration. So one of the reasons why I said this 385.87 level would be the best level to scalp puts today when I was done trading it is because this is where it topped out from having that reaction of the breakout, the reaction of support. And then this is that day 2. This is that day 2 where it reacts support, has that breakout, right? So that's why I said that. It's a key make it or break it level. And if you just study historically how the SPY has been reacting when it has an overreaction to the upside, where it bottoms in the low 370s and quickly shoots up to 380s, bottoms at the low 370s, quickly shoots up to 380s within just 2 days, it tends to, have a pullback at that level. And that level, as you can see right here, is 385.70, 386 right here, 385, 385.50 right before the CPI report came out, right? So it's a big downside potential level, right? So that was the thesis behind that, and kind of staying away from puts as soon as I exited for the morning. So why did I decide to scalp puts this morning? Because my video was more focused on a call theory and to wait, to buy puts only if it goes red. I'm going to explain to you why here shortly. But in terms of that, you can see right here, this all alerted real time. I alerted puts at 9:36 a.m. and then just 10 minutes later, just actually 4 minutes later, I sold these for a 26% and a 22% win. And then I bought puts one more time for a 10% win. And then I called it after that because I did not like the chart. So one of the main reasons why I bought puts this morning is it was just overextended. So we did hit that previous closing price and it bounced, which is very bullish. That's your confirmation that we're going to be on track to have a bull day. But in terms of how the chart was looking at the time, it was looking fairly bearish, and we had a lot of resistance here towards this 382 level, 383 level, and it was simply just no spectacular, no special strategy, not my best strategies. It was simply just a quick scalp that ended up working out very well. It's just the way it looked in the morning. I was noticing there was a lot of resistance here towards 382.50, and it was starting to pull back. And then it was just chopping at the highs, chopping at the highs, chopping at the highs. The Squeeze Pro indicator turned dark blue right here, which is bearish. When this turns dark blue like this, prior to having a big run up, it tends to have a micro sell off. As you can see right here, this is when it turned dark blue right here, and then it starts to have a micro sell off. That was one of my confirmations. But pretty much for me, the reason why I played puts is because we were at key resistance towards the high end of a channel. It had an overreaction, and there was resistance right here at 383.30, and there was support right here at 382.90. Once it cracked this support right here, the highs of these wicks, the highs of these candles, were now at that previous support, which is bearish. That means it's forming lower highs, and it's going to try to sell off. And as long as it can crack that key level, this would be the key level that it would need to crack, right? So it was confirmed bearish because it turned previous support right here into resistance, forming those wicks, and it has a nice downside potential level because, as you could see right here, if we can take out this key support at 382.30, your next support isn't until here, which is at 381. And if it cracks 381, there's really not much support. Your next support would be towards 380, but it did form a slightly higher support, right? So that was the theory behind that. I noticed consolidation towards the highs. I noticed it was an overreaction. I noticed we were towards a lot of resistance towards the higher end of the micro channel, and I felt like it was really overextended. We triggered dark blue on the squeeze, and once I noticed that this previous support right here was reacting as a resistance level with top wicks, that's my confirmation due to those lower highs, due to the crack and the previous support now reacting as resistance with these bearish wicks. That's my confirmation that the SPY is going to crack support. And if it does crack this support right here, the next support level, the next consolidation level, so if it cracks this 382.30, the next level is all the way down here towards 381. So if it looks bearish at the time, I'm going to take advantage of that opportunity. And that's what I did. And then in terms of where did I start locking in profits, I locked in my gains right here on the first green candle when this was at 381.70. I locked in my gains. That was a 26% gainer. Then I played puts one more time. I bought puts right here before this pullback. The reason why was it turned previous support right here, this key level. You see this key level, this key previous support. It cracked. I sold into the crack. It bounced back up, lower highs, lower highs, lower highs, rebought puts because that previous support again is reacting as a resistance level. Previous support right here, reacting as a resistance level. And then it continues to drop to the next support level. And the next support level was right here at this 381.20 level. And then in terms of when did I start selling puts, I started selling my puts literally right here. Right before this big move up, I started locking in my gains right here. Because when it forms those green candles and consolidates, it's going to try to spike back up to that previous support level. I'm scalping in and out, not holding these, right? And with that being said, this is key support. You have a lot of key support right here towards this 381.50 level. If that reacts as a support level and starts breaking out, it's going to skyrocket like it did right here. And the overall trend was bullish on the day. And I knew that. Scalping my puts, I knew that. It was a quick in and out trade. If it were to crack 381.50, your next overall support would be towards 380 for a nice pullback. But as you could see, in terms of confirmation, how do you know this is about to go bullish? This is how you know. When this support level right here, this is support, it bounces back up, turns the previous support into resistance, that's bearish. It continues to go down. It's going to bounce back up to previous support, right? So you sell into the pullback because it's going to try to bounce back up to previous support. Don't sell into the rip, sell into the pullback on the puts. Now, if this pushes to the previous support level and goes above, that's when you're going to start to see the trend reversal on SPY. That's when that trend is going to shift from micro bearish to micro bullish. When it cracks this support, it cracks, it pushes back up. If it breaks above, see how it's breaking above, see how the lows of these wicks are now turned into support, has a small little breakout, boom. That's your confirmation that the trend is no longer bearish and it's going to flip and it's going to try to spike. So if I were ignorant enough to hold puts seeing that this is turning this previous support right here into support, I would have 100% never held past right here. As soon as I see this breakout move here to the upside, I'm out of puts. I'm out of puts right here at 381.60. Now I got out right here on the dip because I'm well aware that we're at a key support level. The trend is overall bullish. I'm selling into pullbacks, and then I can add back some size when it rips back up to the previous support level if it reacts as a resistance level. See how it rips back up to previous support and it starts to sell off? That's bearish. Right here, it did the opposite. It ripped back up to the previous support, and it never came back down. It never formed that red candle. It started forming wicks at that previous support, turning this high of the candle into support, and then boom, this is your confirmation that you know it's about to go down and the bulls are about to step in right there when you see that breakout, when you see that previous support, react to support with the little move to the upside. That's how you know that bears are about to get squeezed and a big move's coming to the upside, right? Plus, I'm not going to be greedy and hold when I know the trend is overall bullish. And I didn't play calls. I stayed away from calls today because I don't like chasing calls. Overall market sentiment is bearish. I don't like buying calls towards the high end of the channel. One thing I could have done better this week that I was doing actually last week was buying towards the low end of the channel. I wasn't doing that much this week, but I had the right thesis. I had the right mindset. I didn't trade against it and stuff like that. If I took a put, it was just a quick in and out scalp where I try to make a nice 20-30% return on a same day contract. But I don't like buying and chasing calls this high. I kind of just like sitting on the sidelines. But yeah, that's how I came up with that theory. That was recapping the trades, and that's how I came up with the theory that this was going to be a bullish day if the SPY does not go red. The reason why is I'm looking at this chart. Strong push up here, strong push up here. If it reacts, if you see a key level react as a support level, this is a key level right here, this $380.54, bottom of the wick, bottom low of the wick, big upside potential. And then see right here, top of the wick, big downside potential, right? It's a key level. It's a make it or break it level. So if the SPY forms this green bullish candlestick, and the next day it goes green and holds this 379.50, this red line, this make it or break it level, it holds and reacts to support level, SPY's going to go bullish and it's going to repeat history. And what's the history? This is day 2. It went to 386 on day 2, and then the next day it explode up to 390s, and there's a gap to fill above at 388.67. So that's how you know to identify the trend. You know, if you're looking at the SPY in the pre-market and we're saying, okay, just hit the previous closing price. If it holds that and starts bouncing, it's super bullish day because it's having that second green day, that second breakout. There's a gap to fill above. Look what it did last time. It rocketed to 386 from mid 370s, right? So you know it's going to be bullish because it held, it didn't go red, and it started breaking out and it kept forming higher support. I mean, right here, it turned that key 380s into support. This is a very strong bullish candlestick. Very strong. This is great confirmation in terms of like when to buy calls. I didn't play calls right here, but in terms of like hindsight and in terms of like if you were to apply yesterday's video, this would have been the great confirmation. I didn't end up doing this, but like I said, if 380.50 to 379.50 reacts as support, it's going to be a very bullish day, and we're going to be on track within the next 2 days to fill this gap at 388.67. Last time on day 2, which is what we are on now, we're on the day 2 green move, it went all the way to 385.87, right? So if you know this key level, which was the previous closing price at 377.91, and also this level right here, this 379.50 to 380 level, if you know that reacts to support, and as you can see right here, this is how you know this was a great confirmation to buy a call based off of what I said in yesterday's video. So if you just apply what I'm saying in these videos, you don't have to blindly follow anybody's alerts. You can clearly understand that, okay, SPY's on a downtrend right now, right? It's cracking support. It's forming lower highs. That's micro bearish. But the overall trend is bullish because in the pre-market, it held 378 and it didn't go red. So the overall trend's bullish and it's on that day 2 green, right? So we know those key levels are at 378 and 379.50 to 380. Those are those key levels, those 2 key levels. It already bounced to 378, which is very bullish. And then this is how you can identify if you wanted to buy a call, you should be buying on the dips, not the breakouts. This is how you can identify when to buy a call is right here. And I did the right thing by selling my puts here, but I did not switch to calls, unfortunately. But this is how you can know right here. When it stops turning the previous support into a resistance level. So right here, this is support. It cracks. It bounces back up. Previous support is now a resistance level. That's bearish. Right here, it cracks support. It bounces back up. Previous support, now resistance, right? Right here, it cracks support, bounces back up. Previous support, now resistance. Now here's the shift. When it stops turning previous support into resistance, this is your support level. It cracks, it bounces back up. This time it's consolidating. It's holding, it's forming wicks. And then boom, this bounce right here, that's your best confirmation. That's your strong confirmation that it's time to get in on calls. Because we know that low 380 level is that make it or break it level. This right here, this is what you need to pay attention to, these candlesticks. 380.54 is the low. If this bottoms at 380s and you see a shift where those previous support levels that are cracking are no longer reacting as a resistance and they're breaking above and now turning to support for that micro reversal, that overreaction, continuation move to the upside. Look at this. It bottomed at 380.54 and it shoots up all the way to 397. You know that's where the buyers are going to show up. So if you see that confirmation coming in where that previous support level that cracked is now breaking out above and reacting as actual support and pushing, then you know when to buy calls on the dip. So now you know how to buy calls on the dip. Don't go buying on the rips. Don't go buying on the breakouts. That is how you buy calls on the dip. So I hope that makes sense. It makes sense. That's a very valuable lesson. And it had a very strong bullish wick, very strong candlestick, and it consolidated towards highs and it started breaking above. In hindsight, it looks so obvious. In terms of what I did, like I said, I literally exited my second put scalp. I entered right around here on the lower highs. I exited right here on the first green candle. So yeah, I hope that makes sense, and I hope that explains how things go down. In terms of calls, I really like buying at better prices. In some weeks, I'm just more focused on puts than calls. You know, there's always room for improvement. But in terms of the analysis, in terms of what I teach, it's 100% spot on. So focus on the strategies. Focus on the price action. You want to become a better trader? Master price action. What I'm showing you in these videos, what I just shared with you, I shared with you how to read price action. There is no hindsight, none of this BS. This is real. You can use what I just taught you and apply it to the market if you understand how that works. I just showed you how to identify a trend reversal at a key level, right? So master price action. That's the best thing I can recommend to you. Not indicators. Understand the key make it or break it levels. Understand the upside and downside potential. Understand how to identify when the price action is bullish, when the price action is bearish. Understand when to get in, when to get out, when to adapt and switch sides, when to sit on the sidelines. Learn how to master price action. That's one of the number one advice that I can really give you guys. So with that being said, let's go over the update now. So in terms of the SPY, how are we looking? We have a gap to fill. We have a gap to fill at 388.67. So write down these two levels. This is going to be the game plan. Let me clear this for you here. This is going to be the game plan, right? This is the new game plan. Two levels. The first level is going to be the second best level to buy puts into next week. And that is going to be right in this zone. So take the high of this, see how the levels I'm taking have big downside potential. I'm always looking for levels that have big upside or downside potential. So 385.71, big downside potential. You could see right here, 386, big downside potential. So 385.70 to 386 to low 386. That is going to be a resistance zone. If the SPY reacts as a resistance level, there's going to be a micro put scalping opportunity where you don't hold, you get in, you get out, you make your quick 20, 30, 40%, right? So keep an eye on that level. Now, the best level for the puts heading into next week is going to be right here. There's a gap to fill right here at $388.67. If that reacts as a resistance, you see the bearish confirmation where it's chopping up at the highs, it's forming bearish candles. It cracks that support, bounces back up. So basically, in terms of a great confirmation that I can give you is something like this. Pretend this right here is the best level to buy puts on SPY. So the best level into next week would be 388.67. It's sitting at 388.67. It's chopping up at the highs. It's forming bearish candlesticks. It's failing to break out. It has a small pullback, bounces, turns the previous support on the 1 minute candle into resistance. Top wick, top wick, top wick, puts, right? So just use that as one of the confirmations to trade these at the best resistance levels on the puts. And what I just showed you can be used at 385.70 and 388.67. So pay attention for the gap close reversal on the SPY at $388.67. Now, for us to remain bullish, let's talk for us to remain bullish to actually fill this gap. 385 is the make it or break it level. 385, 385.70 has to break out and hold. If it can't, it's going to start to sell off. It's going to start to go bearish, and it's going to start to fill this gap at 377.91. The new best price, write this down, to buy calls is going to be $377.91. When we push back down to 377.91, it's going to be an overreaction, and it will likely have a nice bounce, right? So what is it that I'm talking about? This is exactly what I'm talking about. When SPY has these sharp moves to the downside at these key levels, right? And we now have this gap to fill at 377.91. If we quickly go back down to 377.91, there should be a good opportunity to scalp some calls with a tight stop loss. So the best level for call options into next week is going to be $377.91 to scalp call options for a gap close reversal. The best level for puts into next week for the gap close reversal is going to be 388.67. Now, in terms of best resistance and best support levels, 393 is the best resistance level right now, and 374 is the best support level. 374 to 373 are the best support level for calls. So that's the overall side of the channels. So the micro channel right now, 385.70 to 385 is make it or break it. Cracks, reacts as a resistance. It goes back down to fill the gap at 377.91. That's where you want to be scalping calls. If 385.70 breaks out, turns into support, it pushes back up to fill this gap at 388.67. That's the best level to scalp puts. Now, in terms of the wider prices of the channel that aren't at gap levels, so those are the gap close reversal levels, the best levels to be traded at. In terms of the wider levels, 393 puts at major resistance and 372 to 374 zone calls at major support. I would say 373 to 372 calls major support. Those are the overall levels. So like I said, the best levels right now, we're towards the middle of the channel. So we're towards the middle of the channel. In terms of like best action, it's only going to be good if we see resistance form at 385.70 for puts here. Otherwise, I wouldn't go chasing a call to fill the gap. So the best levels to be trading at next week on the SPY, 373, 374 calls, 377.91 calls, 385.70. If it reacts to strong resistance, you can attempt to play puts. It's just like we're really trying to push back up here to fill the gap. So I would probably just avoid that unless it's a very quick scalp with a very tight stop at 386. Best level for puts, 388.67 and 393. There you go. You now know the best prices to trade at the best setups. Let's discuss some stocks now. So in terms of Roblox, Roblox is turning micro bullish here. It looks like we are on track to fill the gap. There's a gap to fill at 41.25 on Roblox. When we hit 41.25 on Roblox, that is going to be the best micro price level to scalp a put in and out very, very quickly. These are day trades. In terms of my average holding time, I'm typically holding 10, 15 minutes. And within those 10 to 15 minutes, especially trading in the morning, trading at key best levels, I can make a 30% to 50% return very, very quickly, especially on a same day expiration. Sometimes it's even bigger. Sometimes it's 100%, but it's typically like 30, 40% around that. Sometimes like 25%, and I'll put in about 10% of my portfolio. So if I put in 10% of my portfolio and I make 10% on an option contract, I just made a 1% return of my portfolio, and I'm typically risking like half of that to 1/3 of that. So that's how I kind of do it on high confidence setups. I'll size in 20% of my portfolio. If you're just starting out, you got to size in lightly. Don't go big. Don't go all in on option contracts. But with that being said, there's plenty of different ways to trade strategies and option on contracts. I don't have time to reveal it all within this video. But Alibaba, in terms of Alibaba, we're due for some sort of push up. You know, we filled this gap at 98.52. It had a gap close reversal as soon as it filled the gap here, and it's been rocking it ever since. Alibaba's starting to look bullish. It's starting to look like it does want to climb back up to fill this gap at 109. In terms of SGen, I'm just keeping this on my radar right now. It's trying to go micro bullish, so I'm not doing anything with the leap puts and all the merger and stuff that's going on. I'm just gonna sit on the sidelines right now. LI is trying to go a little micro bullish here. MARA, you watched my video yesterday on MARA. What did I tell you guys? It's gonna explode up to fill the gap. Go back and watch the video, man. That video was so on point yesterday. That's why for those of you who stay to the end, you get rewarded with the best information. 851. There was a gap to fill at 851 on MARA. And I told you guys, it's going to explode up to fill that gap. Once it fills that gap, you're going to want to look to scalp puts. It had a very nice move in the morning. Look at this best confirmation. Man, for those of you who stayed to the end of these videos, we're 25 minutes in. For those of you who stayed to the end, you just got rewarded with the best information. This is what it looks like. You find a stock that has an overreaction, right? So this is an overreaction from 5s to the 9s. And then it was recently in the 7s, 850s. That's an overreaction to the upside, right? So if it hits a key resistance level, if it fills a gap, there's a gap to fill here at 851. If it fills that gap at 851 and forms resistance, I showed you one way to determine resistance on the SPY earlier. This is another way, and this is what the truly best setup looks like. The wicks. If you see this, this is a gray candlestick. This is a gravestone doji. This is the most bearish candlestick. It's a trend reversal candlestick, the dojis. You see these gray dojis form at resistance, these top wicks, and these bearish candles, these bearish wicks at a gap fill level. That's your best confirmation to scalp puts. That's an A1 phenomenal trading setup. And this was all mentioned in yesterday's video. I was trading SPY puts at the exact time this happened with MARA. So this could even give you more confirmation that SPY can potentially have a pullback when you see that. That is so bearish. It filled the gap, and as soon as it filled this gap right here, it formed bearish wicks in a gravestone doji trend reversal candlestick to then come back down to the previous closing price. That's when you know to be scalping puts. As soon as you see that gravestone doji, bearish wicks, buy puts into that resistance level, boom. Make a quick 20-30% profit, rinse and repeat. And you guys know in terms of puts that there's been great exit times at 9:50 to 10 a.m. and then for the reversal and the calls on the dip if the trend's bullish. So that was MARA. No current opinion on that as of now, but it did react bearish. No current opinion on that as of now. Not interested in anymore. I gave you guys the best setup in the last video. Now it's time to move on, right? If the setup's not there, we're not going to trade it. It's as simple as that. Twitter had a breakout. Twitter broke above the 3681 key level, turning bullish, now rocketing up to fill this gap at 3879. Twitter's going to be on track for a gap fill play to 3879. That's where you can potentially look to scalp puts. Me personally, I find Twitter a tough stock to trade, so I'm just going to stay away from it. It's not my type of price action. VERU had its breakout. I didn't do anything with this one. This one, held the previous closing price and started rocking it up. C, what did I tell you about C, man? I told you guys, if you look at the chart on Citigroup, it is going to go super bullish. And that was using the gap close reversal strategy. We identified this and called this out in yesterday's video that was due for that super bullish move heading into tomorrow. In terms of Citi stock, there was a gap to fill at 42.71. It nearly filled that gap at 42.71 yesterday. It bombed at 43.44. And like I said, this is the make it or break it level. If it pushes above this level, it is going to go parabolic. And that level was right here towards this, towards this 45-ish level, this 45-ish level. See, when it reacts to resistance, big sell-off. When it reacts to support, big move up. And it just went parabolic today. So that was a really good one, man. That was a really good one. And it's interesting how that occurred, right? So it had its earnings, and that move occurred at the lows like that. So see, if you're playing earnings, there's always that equation to like a guessing game. But if you use charts and combine with earnings, if you're doing like that more YOLO strategy where you just hold through earnings and not get in before, there are times where it is fairly predictable what the stock is going to do. But it is a YOLO at the end of the day because, it's earnings. If it doesn't go your way and the chart goes against you, your options go to practically nothing. But this was a setup where it was highly predictable. Like if you're one of those people who play earnings, this was one of those situations where if you read the chart, no matter what you think the earnings is going to be, it makes sense to buy calls because we're so oversold. The market looked like it was about to break out. And it was at that key gap close reversal level with huge upside potential. But yeah, that was that one in terms of the bullish reaction. Uber had its make it or break it level. What I tell you guys, if this red line reacts to support, and as you can see right here, reacting as support, pushing up, then Uber's going to have a very nice green day. So the overall trend was correct on the day. BAC, what did I tell you guys about BAC? If we push above this level right here and it reacts to support, it's going to push up and have that strong day. This was all determined by the daily chart. Today was a huge day. Unfortunately, I didn't play calls, but I still had a blessed day. The portfolio was up almost 10% on the day. But if you were to watch that video and take into action, like I'm telling you, these setups don't come around every day. We're at these amazing key levels. When we're at these amazing key levels, and this level right here that cracked reacts to support, it's going to go super bullish instead of super bearish for new 52-week lows. And that's exactly what occurred. Like what recently happened with Twitter at those 52-week lows. And same thing happened with Uber with a nice move up, right? So it's very simple. You wait for them to go above these key make it or break it levels that we identified yesterday. And once they start reacting as support, forming these wicks, consolidation, small little breakout, you start buying calls into that bullish confirmation, riding this back up a little bit. Very simple confirmations to determine if it's bullish or bearish at these key critical make it or break it levels that don't come around every single day. So that's that. CVNA did the same thing. NVIDIA did the same thing. The charts all looked bullish. This is all determined in yesterday's video. NVIDIA is at an interesting level. We're going to have to see how it reacts. There's a gap to fill at 158.38. If that reacts as a resistance, look to scalp puts. If it breaks out, I'm just going to stay away from it. So, yeah, we're going to have to wait and see how these reacts in terms of Pinterest, $20.24, key make it or break it level, gap close reversal level. If it breaks below 2020, basically what I can recommend for Pinterest is buy puts on the first red day. This is an overreaction. When Pinterest has its first red day, play puts at the previous closing price. Has a small gap down, wait for it to go back up to the previous closing price, play puts, quicken it out scalp, make a nice profit. That's what I can recommend for Pinterest. So that is how you trade. The best setups at the best prices. If you do want to be a part of Traders Society, my team, the one on the group, right? If you want to be a part of Traders Society, it's going to be the first link down below in the description. You can get started with your education this weekend. You could start studying the video lesson library. You can learn how to trade the best setups at the best prices. You can learn the unique gap trading price action strategies. If you like my style of trading, if you like my style of reading the charts, reading the price action of live trading, this would be the right program for you. You also learn risk management, position sizing, psychology, and mindset to trading. You also get access to the chat room. You also get access to live trading streams that we do every single day at Market Open. And there's so much more to it. If you want to check it out, and that is the best place to get a hold of me, to get my real-time analysis and real time to get your questions answered, it is all within Trader Society. And we got a great team and great moderators in there as well. It's the first link down below in the description. You can get started today, and it's instant lifetime access as soon as you sign up for the program. It's going to be the first link down below in the description. I will see you guys with my next video. Will likely be on Sunday, continuing to prepare you guys to trade the best setups at the best prices. This was more focused on a recap. I'm going to have new setups and new opportunities prepared for you guys on Sunday. So stay tuned for that. And I will see you guys on the live trading stream tomorrow on Monday morning. Thank you guys so much for tuning in. I will see you within the next video.